It's January 2026. Mary, a 71-year-old retired teacher, opens her banking app. She's been waiting for this moment all month. She knows her Social Security check is getting a raise, a 2.8% increase. That's supposed to be about $56 extra. She scrolls down. She looks at her deposit amount. Her heart sinks. The check is there. But something is wrong. The amount is smaller than she expected. $18 went straight to Medicare, just gone, before she could even see it. She opens a letter from Medicare that arrived the same day. Your Part B premium is increasing to $202.90. Mary feels her chest tighten. She wonders, did I make a mistake? Am I losing my raise? How is this even legal? But here's the thing. Mary is not alone. Millions of seniors are facing this exact moment right now. I am Jocelyn. I'm a senior policy analyst who specializes in retirement finance and Social Security rules. For the last 15 years, I have helped seniors like you understand the complicated rules that protect your benefits. Today, I'm going to explain exactly what is happening to your 2026 raise. I'm going to show you the official government rule, the Hold-Harmless Provision, that is supposed to protect you. But here's what you need to know before we go any further. There is a hidden mistake that millions of seniors are making right now, a mistake that can cost them thousands of dollars over their retirement. By the end of this video, you're going to know what that mistake is, and you're going to know exactly how to avoid it. So stay with me. Let's protect your benefits together. Let me tell you about Robert. He's 67 years old. He retired 5 years ago from his job as an accountant. He gets a Social Security check of about $2,071 per month. That's pretty close to the average. Robert has been careful with his money his entire life. He paid his taxes. He followed the rules. When Medicare enrolled him at 65, he said yes. He signed up for Part B. He thought he was doing everything right. In October of 2025, Robert heard the news on the radio. Social Security beneficiaries will receive a 2.8% raise in 2026. Robert did the math in his head. 2.8% of $2,000? That's about $56 a month. $56, Robert thought, that's great. That'll help with my grocery bills. He waited patiently for January. January arrived. His new Social Security payment came in, but something wasn't right. The payment was only $38 higher than the year before. Not 56, 38. Robert called Medicare. He was confused. He wanted to know where his money went. The person on the phone explained, your Medicare Part B premium increased by $18. That came out of your Social Security check automatically. Robert felt cheated. He felt confused. He even felt a little angry. But here's the thing that really upset Robert. He found out later that he didn't need to lose that much money. There was a government program he qualified for, a Medicare savings program, that could have paid his Part B premium for him, but Robert never knew about it. He never applied, and by the time he found out, months had already passed. Robert's mistake wasn't stupidity. His mistake was not knowing which government rules protected him, and he's not alone. Honey, speaking clearly and methodically. Okay, let's break down the facts. These are the official numbers from the Social Security Administration and the Centers for Medicare and Medicaid Services. Fact number 1, the 2.8% COLA is real. In October 2025, the Social Security Administration announced that the 2.8% cost of living adjustment would go into effect in January 2026. This is based on the Consumer Price Index, the CPI, which measures inflation. For the average retiree, that 2.8% equals about $56 per month. That raise is real. That money is coming to you. Fact number 2, the Medicare Part B premium also increased. But here's what happened at the same time. Medicare Part B premiums went up. The standard monthly premium increased from $185 in 2025 to $202.90 in 2026. That's an increase of $17.90 per month. And the annual deductible went up from $257 to $283, an additional $26 increase. So your raise was $56, but your Medicare premium increased by $17.90. That leaves a net gain of $38.10, not $56. 38. Fact number 3, the Hold-Harmless Provision, the rule that's supposed to protect you. Now, there is a federal law called the Hold-Harmless Provision. It's in the Social Security Act, and it was designed to protect seniors exactly like you and Robert. Here's what it says. A beneficiary's Part B premium increase cannot be larger than the dollar amount of their annual COLA increase. In plain English, if your raise is $56 and your Medicare premium increases by $18, you pay the $18. But you cannot pay more than $56. The government protects you from paying the excess. That's the theory. But here's the trap, and this is critical. The hold harmless rule does not protect everyone. There are 5 specific groups of seniors who get zero protection. Let me explain each one. Group 1, new Medicare enrollees, turning 65 in 2026. If you are turning 65 years old in 2026, or if you are first enrolling in Medicare Part B in 2026, you receive zero hold harmless protection. Not some protection, zero. You will face the full $18 premium increase with no protection from your COLA increase. The Centers for Medicare and Medicaid Services estimates that 2.5 million seniors will turn 65 in 2026. Most of them will get no protection. Group 2, high-income beneficiaries, IRMAA surcharges. If you have higher income, Medicare charges you an extra surcharge called an Income-Related Monthly Adjustment Amount, or IRMAA. In 2026, if you're a single filer with income over $109,000, your Part B premium jumps to $284.10 per month. That's an $81 surcharge on top of the standard premium. At the highest income tier, if you have $500,000 or more in income, your Part B premium reaches $689.90 per month. Hold harmless protection does not apply to you. Group 3. Beneficiaries with pensions, IRA withdrawals, rental income, or investments. Here's where it gets tricky. If you receive any other income besides Social Security, a pension, IRA withdrawals, rental income, investment income, or part-time wages, you face a serious problem. That additional income counts toward what's called your combined income. And combined income determines whether your Social Security benefits are taxed. I'll explain this more in a moment. But for now, understand this. If you have other income sources, you're likely not protected by the hold harmless rule. Group 4, those in Medicare savings programs. If you are enrolled in a Medicare savings program, a program designed to help low-income seniors, the hold harmless rule does not apply to you. These programs include QMB, Qualified Medicare Beneficiary, SLMB, Specified Low-Income Medicare Beneficiary, QI, Qualifying Individual. Even though these programs help pay your premiums, you do not receive hold harmless protection. Group 5, anyone receiving a quarterly Part B bill. If you are not having your Part B premium deducted directly from your Social Security check, if instead you receive a quarterly bill in the mail, the hold harmless rule does not apply to you. You will owe the full premium increase. Fact number 4, the hidden tax trap, the Torpedo Effect. Now, here's where it gets really serious. There is a rule that most seniors don't even know about. It's called the Torpedo Effect by tax experts, and it can wipe out your entire raise and then some. Let me show you how it works. Suppose you get $2,071 per month in Social Security. That's about $24,852 per year. You also get a pension of $800 per month, $9,600 per year. Your combined income is $34,452 per year. Now, you receive your $56 COLA increase. That brings your Social Security to $2,127 per month. Your combined income is now about $34,500. Here's the problem. The IRS has a threshold for Social Security taxation. For single filers, the threshold is $25,000. You were just under that threshold before your raise, but with your $56 raise, you just crossed it. Now 50% of your Social Security benefits become taxable. Let me do the math for you. Your annual Social Security is $24,932 after the raise. 50% of that is $12,466. If you're in the 12% federal tax bracket, that's about $1,500 in additional federal income tax you now owe. Your raise was $56 per month, or $672 per year, but your tax bill increased by $1,500. You just lost $818 in real income. That's the torpedo effect. The IRS has had these exact same thresholds since 1984. They haven't changed in 42 years. Inflation has happened, but the thresholds stayed frozen. So, more and more seniors are being pushed into taxation tiers they never expected. Fact number 5, the missing information about government help. There are 3 government assistance programs that could help you right now, but most seniors don't know they exist. Program 1, Medicare Savings Programs, MSP. The Qualified Medicare Beneficiary Program, QMB, pays your entire Part B premium, your entire deductible, your entire coinsurance. In 2026, you qualify if your income is $1,350 per month or less for a single person. That's $16,200 per year. You don't have to pay anything out of your Social Security check. The state Medicaid office pays Medicare for you. But here's the catch. You have to apply. Nobody tells you this program exists. The government doesn't automatically enroll you. Millions of seniors qualify but never apply. Program 2, Extra Help with Medicare. Part D. The Part D deductible increased from $590 to $615 in 2026. But if you qualify for extra help, the Social Security Administration will pay your Part D deductible. You pay $0. The program is available to seniors with income around 135 to 150% of the federal poverty level. Again, you have to apply, and most seniors don't. Program 3, Enhanced Senior Tax Deduction, new. In 2025, Congress created a new law. If you are 65 years old or older, you can claim an additional $6,000 tax deduction on your federal income tax return. That's in addition to your standard deduction. For married couples, it's $12,000 combined. How does this help? It lowers your combined income, the number that determines whether your Social Security gets taxed. But you have to claim it on your tax return. The IRS doesn't automatically give it to you. You have to file Form 1040 and claim it on Schedule 1 or Form 1040 SR. Okay, I've given you the facts. Now I'm going to give you 3 exact actions you need to take right now. Don't wait, not next week, now. Step 1. Verify your 2026 payment through official channels. Go to My Social Security, that's www.ssa.gov on my account, and log into your secure account. Look for your COLA notice. This notice was released in November 2025 and shows your exact new benefit amount starting in January 2026. Compare this amount to what you actually receive in January. They should match. If they don't match, if Medicare took more than you expected, call Social Security immediately. The number is 1-800-772-1213. Write down the date you called, the person's name, and what they told you. Keep these notes. Do this today. Do not wait. Step 2, check if you qualify for Medicare Savings Programs, MSP. Go to Medicare.gov and search for Medicare Savings Programs. Look at the income limits. Is your income below the QMB limit of $1,350 per month? If yes, you qualify. Immediately contact your state Medicaid office or apply through benefits.gov. When you apply, be honest about your income. Report all sources, Social Security, pensions, investments, everything. The application must be processed within 30 days by federal law, so apply immediately. If you're approved, the state will retroactively cover your Part B premiums back to when you applied. You get money back. Step 3, claim the $6,000 senior tax deduction. When you file your 2026 taxes. When you file your 2026 tax return in April 2027, you must claim the new $6,000 Enhanced Senior Deduction. Use Form 1040 SR. That's the senior's tax return form specifically designed for people like you. On Schedule 1, there is a line for the senior deduction. Enter $6,000. This lowers your taxable income, which lowers your combined income for Social Security taxation purposes. By claiming this deduction, you will likely eliminate or significantly reduce the federal income tax you owe on your Social Security benefits. If you're not comfortable doing this yourself, talk to a tax professional. Many offer free or low-cost tax preparation for seniors. Search AARP Tax Aid in your area. Do not skip this step. This deduction was created specifically for you. Take advantage of it. There are 2 additional protections I want you to know about. These might apply to you. Protection 1. The earnings limit exception. If you're still working and you haven't yet reached your full retirement age, There is an earnings limit. In 2026, if you're under full retirement age, you can only earn $24,480 per year before Social Security starts reducing your benefits. We deduct $1 for every $2 you earn over that limit. But here's the protection. Once you reach your full retirement age, and full retirement age varies depending on when you were born, there is no earnings limit anymore. Zero. You can earn $1 million per year and keep every single penny of your Social Security benefits. If you're working or thinking about working, understand this threshold. Call Social Security to confirm your full retirement age. The number is 1-800-772-1213. Protection. 2. Medicare appeals. If Medicare denies a claim or you disagree with your Part B premium, you have the right to appeal. There is no fee for appeals. You have 120 days to file. Go to Medicare.gov and search for appeals, or call 1-800-MEDICARE. Request a Medicare summary notice. Use that form to appeal. Many seniors don't know they can appeal. Don't be silent. Exercise your rights. I want to be honest with you about something. You should not rely only on YouTube videos to protect your benefits. You should not depend on random notifications from social media. The rules for Social Security, Medicare, pensions, banking, insurance, these rules change. They change every year sometimes. And if you're not getting official, timely alerts, you're going to miss critical deadlines. That's why I'm asking you to do one more thing today. Click the link in the description below this video. Join the Global Senior Alerts official WhatsApp channel. On this channel, you will receive real-time alerts about Social Security changes, official Medicare updates, not rumors, banking regulation changes that affect seniors, pension law updates, insurance policy changes, travel rules for seniors. When you join, you'll also download a free resource we call the Senior Benefits Protection Guide. This guide has phone numbers, websites, forms, everything you need. More importantly, you'll be part of a community of seniors who are protecting themselves. No spam, no sales pitch, just real information from official sources. Look, Social Security is not going away. Medicare is not going away. These programs work, but you have to understand the rules. You have to take action. Mary, from the beginning of this video, she joined the WhatsApp channel last month. She learned about Medicare savings programs. She applied. She was approved. Now the state is paying her entire Part B premium. She's getting $500 per year back that she didn't expect. Robert did the same thing. He found out about the $6,000 tax deduction. When he files his taxes in April, his tax bill will drop significantly. Both Mary and Robert took action, and both of them protected their benefits. You can too. So join the Global Senior Alerts channel, download the guide, share it with your friends, share it with your family members who are retired or about to retire. This is how we protect each other. Thank you for spending these 12 minutes with me. Your benefits matter. You matter. And you deserve to understand the rules that protect you. I'm Jocelyn. Stay informed, stay protected.